Hi everyone, today we're going to talk about UK stock that a lot of you guys have been asking for in the comment section. So what I have done today is I spent 3 or 4 hours today looking into this and seeing what my thoughts are, if this is a good opportunity to buy. So me sharing that with you, I hope it's useful for you guys, and if you could, in return for this research, if you could just hit the like button, that'd be absolutely amazing. But we're going to go onto this stock or this business, and the business is called THG PLC. Now they have recently had a bit of rebranding, so you might better know them as the Hook Group, and we're going to be taking a look at these guys. I think the big reason why a lot of people are interested in it is because recently the stock has dropped 70%, and it's great to see that a lot of people have started to get that mindset of, oh, that stock has dropped 70%, is that an overreaction? Is this now a company that I can make really good money? Is this a stock or a business that should be valued at £10 and is now at £5, for example? And it's good to see that that is the process that a lot of people are going through, rather than looking, oh, that stock's gone up 100% so far in the last 6 months, I'm missing out on that one, maybe I should go buy that one, without any check on the valuation side of it. So it's a good mindset to have. So what we're going to do is I'm going to share that research with you and look if this is an opportunity to buy. So we'll take a look. So THG PLC, also known as the Hook Group, is a British e-commerce company headquartered in Manchester, operates over 100 international websites, and was founded in 2004. So it has been around for quite a long time. Now, if you have a look at the stock chart, what you will see here is that the company was around about nearly an £8, 52 highs of £8.37. And since then, what you will see is the stock has had a very rough time, and especially the last 2 months, you will see this here. This is the drop that everyone's looking at, 66%. And if we go back from here, near its highs, you can see this is down over 70%, which is a huge amount. So people are looking at this stock now, looking at the share price drop and thinking, can we go buy this one? Ticker symbol THG. And especially, I think the big thing to point out is that it has gone from being a £6.64 stock down to this £2.22 within pretty much 2 months. That is a very big drop. To lose half of your company's valuation within 2 months is a massive amount of drop. You can just imagine, well, even more than that, 66%. You can imagine that is a massive drop from what's gone on here. And as we're recording this video, even today, it is falling off a cliff a little bit. So the big thing is to say that we are having a stock here that is just bleeding and bleeding and bleeding. So it is, if you are going to buy this, it is important to point out when it is having a free fall like this, it could be a bit more of catching a falling knife, so do be careful if you are considering buying this. Now, what's really interesting about this company is that it is currently valued at 2.7 billion. Now, if we actually go back to previous valuations, because it has only recently come onto the stock market, is that this company was actually valued at 2.5 billion in 2017. So you can see that that is around about 4 years ago. The company was valued exactly what it is right now. So that kind of puts it into context that when we look at the financials, and if this company has grown over that last 4 years, you are buying the company at the same valuation it was at 4 years ago, which is something to keep in mind. And you can see here that this is when the stock actually IPO'd, which was September 16th, and they actually did quite well when they came onto the stock market. Personally, for me, I never got interested in this one. I had a quick look, I think at the time, I think the valuation was just a bit too much, as a lot of IPOs were, but it did quite well, and you'll see that it had a $7 billion IPO, or 5.4 billion in pounds. So you can see here that in that kind of year period, we've gone from it being, IPOing at 5.4 billion down to a 2.7 billion. So from that IPO, it has lost a lot of value. So going up into the recent trading update, you would think everything is looking pretty strong. But before we get stuck onto that, what does the company do? Well, it has quite a few things going on here. It's quite a busy company. So there's THG Ingenuity, which is probably the part that's the most interesting thing, which we're going to be talking about in a second. The nutrition side of it, which you probably will recognize a lot of the brands. They do have quite a few, but they have some really good brands in there. Beauty, and then on demand, which I think kind of ties in with this part of the business here. But you can see those are the 4 big parts, and you'll see that there's also an other part as well, which they have some other brands which won't come under here. But like I said, they own a lot of different brands. And you can see here, this is how they break down in sales. I mean, I've got to say here, why did they not use different colors than what it is? This is like literally they're all the same color. I had to go like 1 centimeter from my screen to kind of see how much they kind of make up. But you can see that they do kind of have a good breakdown of different parts of the company here. So as you probably guessed, the beauty side of it does sell a lot of beauty products, and they have acquired quite a few of these. This company is very big at acquiring a lot of companies, especially a lot of these beauty companies as well. Nutrition, as you probably know, they sell nutrition products. Same again, quite heavy on the acquisition side of it there. Ingenuity is probably the exciting part of this business. I think that this has the potential to be the biggest part of the business. It's, from what I can see so far from a research point of view, it's part of the company that's very much like a bit of a mini Shopify. It works with a lot of massive brands. I think some of the brands are, for example, are the likes of Coca-Cola, for example. Homebase, I think, is one of them. And basically they help them with their e-commerce side of it, and they do that through obviously the support of the sites, for example, but also the likes of analytics and marketing, for example. So yeah, basically the best way I would sum it up is a bit of a mini Shopify. And I would say that the big thing as well is like this is more of a SaaS platform, which is very interesting because that's a bit of a game changer from, say, something of their beauty and nutrition products, which obviously are doing very well, but the markup or the potential margins you would make on a platform like this would be probably a lot better than them. So this is a very good newish addition to what the company historically has been doing. And on demand ties in a bit with this company as well, is basically a place where you can make products, and basically the Hook Group or THG would basically do a lot of the work for you. For example, it says here, THG On Demand covers a full range of production from design, production, marketing, sales, packing, dispatch through to delivery at your customer's door. So basically they kind of make the product, you design the products through them, make the products through them, and they kind of handle all the logistics side as well. So it's basically what Shopify have done recently with their fulfillment center, but rather than just doing the full fulfillment center, you can basically make the full product through them, which is probably slightly better than what the likes of Shopify do. But yeah, this is quite a really good addition recently, and this also is what the Hook Group or THG PLC have done quite recently, is they are very heavy on their investments and keeping the company moving forward, and these I think are quite interesting additions into the business model. Now, looking into the recent trading update, you'll see that the numbers they're putting in are very good. So we can see here that the beauty part of it here, year-over-year growth 55%, really good. 27% here for the nutrition side of it. You'll see that Ingenuity here was 39%, nearly 40%, we'll call it 40%, which is fantastic. And on the demand as well is 45%, and even the other part, which obviously is a bit of a small part, but even that's still growing at 27%, which is really good. And if we compare that over a 2-year period, 142%, 66%, 40%, 133%, and 22%. So yeah, I mean, over the course of a 2-year period, this company growing at 92% is pretty good going. Now, if you look into 2021, it has been another year of acquisitions for this company. They do like to make a lot of acquisitions. You can see here, these are currently some of the brands that they have been investing in, and you can see here that they made 500 million invested in M&A in the H1 2021, which is a big, massive investment into brands they want to buy. And in a second, I'm going to put probably some negative points out there, because obviously that's what's caused the drop about this company, but it is important to say that they were recognized as one of the best companies, top 25 to work for in 2021, which is interesting. Now, so far this looks very positive for this stock or this business. So you're probably looking at this going, okay, why has this then in the last 2 months, after a trading update like that, has fallen off a cliff this much in share price? Well, there's a few mini reasons, but I'm going to go probably with which I think is the big reason. So the big reason was this. They did a bit of a update here, which basically said that THG Beauty is to be separated and listed on a public share trading exchange in 2022. So what they're going to do is this part of the business here, if we go back up to the trading update, which currently is the biggest part of the business, 460 million, they are going to separate that from this business. So that is obviously a big change here for what you think you might be buying. So you might have been thinking you're buying here the THG, and one of the reasons you might be wanting to buy this is because you buy the beauty side of it, which has done very well. It's actually as this trading update is the fastest part of, or the fastest growing part of the business, and then you go and buy in this business and you think, oh, but then they're going to separate that from this here. So you come from probably a very well-diverse business, very big moat when you consider it. And then you think, okay, but now you're going to be taking away one of the main reasons why I invest into it. And that sort of action there is going to spook shareholders. And I think as well is like, the big thing here is this is kind of the only bit here. There's not much detail in here. So when shareholders get spooked by this, when there is uncertainty that is created in the company, then what you will see happen is the share price will fall off the cliff. And this is what's happened. Management have basically come out going, oh, just to let you know, the biggest part of the business, we're going to separate it and make its own division. And because you create that uncertainty, that causes that drop in the share price. So I look at that and think, sometimes it isn't bad to kind of do that. You know, we've probably seen what success PayPal had from moving away from eBay. But the problem is with this is that you're taking away the biggest part of the business, probably one of the major parts why you would invest into the business. And I guess that kind of really spooks shareholders, and that's why the drop has happened. And that's probably the main reason, because of that, and ties in with this here, why that drop is. Now, there's been a few things building up in the background. I won't go through them all today. It's definitely worth a bit of a search, but I think that is probably one of the main causes of what has spooked the share price. Now, what another news is that kind of came out a while ago, this actually came out in May time, but now I think this is also causing another knock-on effect because of that beauty split up, is that a while ago a really strange deal happened with the Hook Group, and basically they went into a joint venture deal with SoftBank, and this is as they say, complex here. I would have gone with weird. That's what I would have gone with. So basically what happened is SoftBank have made a investment into a yet to be existed or yet to be formed technology division of THG. So they've made an investment into part of it, THG, into a division that does not exist yet. And the investment they made valued it at 4.5 billion. So this is the division which doesn't exist, and what they did is, if you look there, 4.5 billion, the company is valued at 2.7 billion. So that is really weird that SoftBank have put in an investment. Obviously the share price would have been a lot higher back then, but they're basically putting into a part of the business that is cheaper than the whole umbrella of the business, which was really strange. And once again, it's into something that doesn't really exist. And under the terms of the 1.6 billion deal, a division of SoftBank has bought an option to buy 20% stake in THG Ingenuity that values the division at 6.3 billion. So once again, you know, this is what we talk about. This is probably going to be a really big part of the business going forward, and SoftBank recognise that. But it's very weird that they're putting in that sort of price and a 20% stake in something that doesn't exist. And I think this is also what then kind of really spooked investors. And what happened is, because we had the THG targeting a separate IPO for the beauty business, it is also considering stock market listings for its other main e-commerce businesses, as well as its technology and logistics division. So this kind of makes sense that they are looking, if we go back to the slide here, they are looking to spin off this business here. But with that investment in Softcat, it looks like they have kind of gone to Softcat, look, later on what we're planning to do is actually split up a lot of our business here. So it looks like the THG are going to be looking to split up a lot of these businesses here. So you go from potentially buying this business that has all these great brands in and a very good moat, very diverse, and then what could happen in the next kind of 12, 24 months is management are looking to basically split up all of these brands. Now that, like I said, that it could work out okay, because the likes of PayPal has flourished without being under the eBay name, and that's done fantastic. But the problem is that at the moment, there's just so much unknown. There's so much unknown with a lot of these businesses. A lot of these businesses getting split up. Most of the investors that would have been in here because they want to own all of these brands. They don't want to own just a single brand, and that's basically what's spooking the stock price at the moment. They're looking and thinking, well, when they were here on the 7th of September, they thought, well, I'm buying THG Group and I'm owning all of these brands. And then what's changed over a 2-month period is investors have kind of realised, hold on, at some point here, I'm going to be having to own all these separate brands, and I don't want that. I want to own it all. And that's the kind of adjustment that's here. This is what management have done here. Like I said, it could be something that works off for them in the long term, but what you've had previously, you've now created all this uncertainty where investors don't know what they're going to own in the future, and that is what has caused a lot of the panic into the stock. So you've got to look at what management have done here, and in 3, 4, 5 years time, we might go, this is a fantastic move, and a lot of these brands here might flourish under their own name. But what it has done at the moment, it has caused massive uncertainty from management. So, like I said, it looks like a masterstroke in a few years from management, but right now, it's probably a bad move from management because they're causing a lot of uncertainty to investors, and that's basically why we have a company that is performing very well, but we have the share price losing so much value. Now, going through into the financials, you can see here historically from 2011 all the way to 2012, you can see the growth in here, and as well as that, you've got to consider the brands they've created in that time, from just being e-commerce to how they've expanded the beauty and everything like that. You can see the revenue growth has been absolutely amazing. Now you can see here selling, general admin and expenses, you can see that they have slightly gone up, but you'll see there's a big massive jump here in 2020. Like I said, we've had a lot of acquisitions in this year, and that was probably what has been pushing that up. So that probably will calm down a little bit going in the forward, but at the moment that means is that especially this year we are running at a loss on this in this company. You can see here they don't really focus on it massively increasing operating income. Mostly it is profitable, apart from the last kind of 2 years. That, once again, I think a lot of that is because they focus on more growing that top line rather than the bottom line. So I think it won't be as bad as this, so I don't think you have to worry about them losing a ton of money. I think it's just a lot of investments, which they will probably carry on doing. But you can see here what that means is that you basically have a company, if you look here, probably let's go from like 2015, you got 34%, 50%, 46%, 24%, 24%, 41%. So you've got a company that's growing, it's focusing a lot more of its investments into that revenue growth rather than the bottom line. And going on to analyst expectations, you can see here that they're predicting a 37% growth rate and then 26%. Now, what they are kind of expecting is that EBITDA to start jumping up. But once again, this is going to be really hard to predict because it depends on how many acquisitions they make, because we know that they will probably do some acquisitions. So yeah, we don't really know how much will go to the bottom line, but they will probably focus on that revenue growth. And that makes it very tricky from a valuation point of view, because we don't have too much profit to kind of decide what's going to happen here. We don't know what acquisitions they're going to make here. From a revenue point of view, though, it doesn't look as bad, because if we go on the total enterprise value to revenues, we were at here four times revenues on the 31st of the 12th, 20th. You can see here that's now dropped down to 1. So that is a massive drop off, and at 1, that's pretty tempting. I would normally potentially consider like a 1 for a company that grew at maybe 10%. So to be at these sort of valuations for a company that probably grow 20-30% is pretty good going. So that's really impressive. And also on EBITDA, you can see here it's gone from a 43 down to a 12 as well, so which isn't too bad. And if we just pop up to the Simple Wall Street, you can see here, this is the revenue growth here, you can see the growth here, see the massive drop off here because of the investments they have made, but a lot of analysts are predicting them not to kind of make that many investments, and they should go and start creeping back up to not losing as much and potentially profitability. I think that's really hard to predict, because obviously we know they like making a lot of acquisitions, so we don't know what's going to happen there. But you can see the growth is going to be pretty strong, and they're expecting from now to make 2.2 billion in 2 years' time to go to 3.4 billion as well. Financially, they're pretty strong. Assets to liabilities is pretty good. We look at the balance sheet, debt to equity is pretty healthy on 28%. They're sitting on 515 million debt, 878 million cash. So that's pretty healthy. I reckon they'll probably do a little bit of share dilution. But like I said, the big thing is we don't know what's going to happen, because we have that overhanging business split up here. So this could all change. That's the big thing. We're kind of viewing this as an overall whole group here, but this could change. But that's where the company stands at the moment. Ownership, there has been a massive insider buy recently, which I guess is a pretty positive thing. And going into the ownership of the company, Matthew Moulding is actually the CEO and exclusive chairman. He's actually the founder as well, which if I look over here, yeah, it's not actually saying it on Simple Wall Street. He's actually the founder, and he owns currently 15% of this company as well, which is pretty good going. So my overall thoughts with this investment or this business or to invest in this stock is that it is probably a overreaction in that share price. The business itself is actually a pretty solid business. They make really good investments. They are making that revenue grow. It would be good if they didn't lose as much money, but they are kind of putting their investments into the top line. So yeah, I think from a business point of view, it is a pretty good business. The share price is probably a bit of an overreaction on that drop. But the big thing that you do have is just so much uncertainty created by management right now. And the thing is investors are unwary what to do because they don't know, because financially the company's performing very good. The problem is as an investor, you don't know what you're buying here. This is the big problem, because you don't know when the beauty is going to get split up. Are they going to split up then other parts of the business? What are you exactly going to own? And while that overhangs the business, I can't see investors being very happy to come into this business until they kind of have that, what are they buying? And I think that's a big thing. Management at the moment, I want to say that they're making a bad decision, but like I said, it might work out quite well. But the way that management are doing this it is causing a lot of problems to investors. So me as someone looking in on this, and if I think it's a buy, I actually quite like the business. I think it's quite good, but for me as well, I look at it and I think I'd rather just buy this THG PLC all under one name, because I have all these brands, massive moat. I'm a bit of like the investors, I'd like to own it all. And then when it gets split up, then I'm kind of considering, well, do I want to buy this business now with the fastest growing part, beauty, taken out of it? I'm not sure. And then I've got to consider, well, I might lose some other parts of the business, and then I'm holding all these 3 different investments here. And me looking into it as a buyer, I'm thinking this is a bit of a nightmare. So no wonder people that are already invested in it are spooked by this. That's the big thing that's kind of going on here. So me looking into it, it is a business that I look and go, I can see why people are looking at this and why they're considering buying it. But me as an investor, I'm looking and thinking, I don't know what I'm going to own in 2 years' time. That's the big thing. So I'd love to buy it, and I think it is a good company. But at the moment, for me, as someone looking into it, because I don't know where the company is exactly going just yet, and I think what other investors are going to do is they probably won't come into it just yet as well, is I'm probably going to just sit on the sidelines for a little bit and just see where the company goes, how they're going to split up the beauty division from this business, what else they're going to do to the business. And then I think when it's a bit more settled down and we know where everything is, then it might be a time to buy. So it might be one that I just kind of just wait on a couple of months and kind of see where it goes. And if I don't like doing short-term predictions, but I think short-term, because there's that much uncertainty, I can't see the share price moving either. And as well as that, if I do start buying this one, I'm already kind of buying a couple of stocks at the moment. And I don't like this one as much as the other stocks I'm buying, but it's one that I'm going to definitely add to a watch list, see where it's at in a few months' time. And if things are looking a little bit better and that uncertainty kind of goes away from the business, it could be one I buy. So it's one that I'm just going to track at the moment. I think everything with the business is good, but just a few things that I want to just kind of see how they play out a little bit before I do buy. But I won't blame you for buying, because it is a massive drop on the share price, and fundamentally the company is very solid as well. So yeah, that's my thoughts on it. So I hope it's useful anyway. If it was, hit the like button. If you're new, subscribe. I'll see you next video.